welcome to this Muhurat Trading. Wish you all a very happy Diwali with me, Aisha Faridi, Nikunj Dalmia and Avan Dabash. Guys, happy Diwali, both of you.
Well, Aisha, Avan, happy Diwali. Both of you are looking absolutely lovely.
Thank
as
you.
always.
Thank you.
And it's going to be hopefully a sparkling Diwali for our viewers as well for this Muhurat Trading.
Yeah, you know, before we talk markets, I just want to take a moment and just want to extend Diwali greetings to our viewers, to their families. May Goddess of Knowledge, Saraswati, empower you with the right knowledge so that you can differentiate between the right and the wrong, between the good and the bad. But equally important, may Goddess of Wealth, Lakshmi, bless you with abundance and prosperity.
And to be fair, she has, right, in this year gone by. I mean, look what's happening across the globe. We always talk about what's happening with UK. Germany, as of today, is almost slipping into a recession already. US, we all know the headlines there. India has managed to stay resilient and, stay sparkling.
We are celebrating Diwali today, but European markets and European economy are bothered about Diwala.
Yeah.
So there is a big difference in what we are celebrating versus what they are feeling. Look, India has been on this pedestal positioning, and who would have thought exactly a year ago that kind of pedestal positioning would be there? What was the narrative a year ago, Aisha? That India will do well and the world will be a decent place to be in because the world was opening up from COVID. But even the world has normalized. There are the real after adjustment of the COVID liquidity, I think, is now visible. Whether it is recession, hard landing or soft landing, whether it is inflation or a fear of interest rate hike, this market has seen a lot of twists and turns in the opinion and the positioning. That's where I think India has really stood out. You look at the market performance, who would have thought ITC would be right at the top? Adani Group, the kind of wealth they've created, the energy with which banks have made a comeback. Yeah. Same time last year, everything was digital. Now I'm so glad that we all are back. Yeah. By the way, it's Nilesha in our studio.
Yeah.
Hello.
Yeah, I thought we would keep him as a secret, but the frame has already revealed him. Happy Diwali.
Happy Diwali.
Happy Diwali. And that's the thing, right, Nilesh? I mean, a year back, we were all still anchoring via Zoom. You joined us, I remember, last year also via Zoom. But we're here, back in person, and the market also is lively, especially as compared to the rest of the world.
Yeah, absolutely. It's a great place to be here this evening here with the Diwali Muhurat special. It's a grand studio and all of you are looking fantastic, and I'm quite sure.
Are you?
As are you.
And all the viewers and their families, I'm quite sure, have had a great year and are looking forward to the Samvat ahead.
You know, and traditionally, Nikunj, this is a very auspicious, of course, Muhurat Trading Session. In the year 2008, incidentally, when the global financial crisis as well took place, you had the Indian markets on that Muhurat Trading Day actually outperform, and that's when you saw a lot of interest by investors to the Indian markets as well, that there's a lot of potential here.
You know, today is a unique Muhurat day because for the first time, I guess, on a Muhurat day, which is just a 1 hour window, SGX is telling you a different story. Yeah. But you had Reliance numbers over the weekend.
On the SGX.
You had HUL numbers over the weekend, ICICI Bank number over the weekend. So let's see how markets actually adjust to those numbers. And then you've got the global support. And on top of that, you've got this excitement whether Nifty will go close to 18,000. Yeah. So I will not use the 1 hour Muhurat trading today as an yardstick to what really lies ahead. What is important for me that at a time when we can spend a lot of time discussing macro and global issues, the reality is that Indian economy, Indian banks, Indian consumer sector, with the exception of IT, a lot is moving in the right direction, and that is what needs to be endorsed.
Okay, and since the SGX is indicating a very, very smart start for us, the last time I checked it was holding up to 90 points. And remember, tomorrow is not a trading off. This is one of those one-off Diwali days when the day after Muhurat trading is not a holiday. We'll come back for a holiday on Wednesday. So tomorrow is trading. So maybe today, maybe tomorrow, the fireworks are going to continue. On that note, let me bring on board a chartist as well, Kunal Bothra, as well as Naresh Mirani. Kunal, Naresh, wish you both a very happy Diwali.
A very happy Diwali, Aisha, to all of you, fabulous anchors, as well as all the viewers of ET Now.
Kunal, I always say you're almost like a co-anchor. You've been with us day in and day out. But Kunal, tell me, what's the ticker indicating? 290 points up. I wish it was a normal trading day today.
I absolutely wish so. I think I woke up in the morning at 9 o'clock and I was like, 9:15, the market should have opened today. It would have been a fabulous day. But no complaints. I think this is a brilliant handover which we've got for the SGX Nifty. I think on Diwali day, you could not have asked for anything beyond this, a 200 plus point gap on the index. And, that too, I think, coming at a point where...
You got up at 9 o'clock in the morning?
Yeah,
कल
9
सुबह
o'clock.
office है, जल्दी आना है. Don't make this a late habit.
For a
That
change.
should not. That is how you don't start your new year. You should get up early. Good habits, Kunal. You incubate that on the new year.
Well, that just goes to show how much he was celebrating and partying last night.
Absolutely, Nikunj. But I think it's a brilliant handover from the global markets. No complaints as such. And I would expect that, it should not just be a one-day wonder, one-day move for the index. I would expect a very strong follow-through for the rest of the week as well.
Naresh, it's banks all the way. That's where all the party is happening. And looking at ICICI Bank's performance, it seems like the party is going to be here to stay. Help us understand, what is it that you foresee in the Nifty bank? Will push the Nifty also forward?
So in the banks, it's only one bank which is not partying, which is HDFC Bank, and which is the largest weight. Otherwise, if you look at all of the other names, you have Axis hitting a new 52-week high and an all-time high. SBI should hit one in the next few sessions. You have ICICI Bank very close to it. So overall, the whole banking space looks interesting. You could be closer to 41,500 to 42,000 much more easily had HDFC Bank also participated. Yes, at least on Friday, we saw some bit of participation coming back from Kotak Bank. So overall, banks looks to be the best space to be right now. And even the financials have started looking interesting. So time to look at smaller names as well in the banking and financial space.
All right, that's the view coming in on some of those banks, but it wasn't just a thriller for the SGX Nifty, but it was also a stellar move when it came to those that India-Pakistan match. What a thriller it was for India. Kohli really bringing back the game, scoring 82 out of 53 balls, and I think, Kunal, that's something that would have also gotten a lot of excitement.
At the start as well as at the end, I think the emotions which were flowing were just about brilliant. I would say, quite a brilliant match. I think the finish, the last 3 overs was spectacular, and I think the standout feature which I of course everyone knows it quite well is Virat Kohli standing out. So it's always the stalwarts in your portfolios, the best in your portfolios, which perform in the toughest of the time. I think that was the biggest hallmark of the match for India-Pakistan.
Who's going to be the Kohli for the market from here? Sorry, I just put you in a spot.
When you say Kohli, that means you're talking of the stalwart, right?
No.
From the large caps, right?
Yes, stalwart from the large caps and from the mid caps.
I think from the large caps, it will still be one of the banks. It could be an Axis Bank.
Yeah.
It could be an Axis Bank.
Not IndusInd? Or do you think it'll be a close call?
I think it'll be Axis Bank.
Yeah?
I think it's going to be
Why?
Axis Bank. I think 4-5 years, nothing much. I think they've got it. They've now they've cracked the code.
Why are you whispering Axis Bank? You
I
say it
thought-
loudly.
Okay, so I think they've cracked the code after a long time. And he's now got whatever, limited time left, right? Maybe a few quarters, maybe 1-2 years for his term or whatever it is. I think he'll do it now. Everything that could go wrong with them went wrong. And valuation gap. The valuation gap is phenomenal. So if the market starts seeing him go towards those ROEs of 15, 16, 17, 18, if that starts to happen, he'll get re-rated big time.
But Nilesh, the underdogs have made a comeback, whether it is ITC or whether it is Virat Kohli.
But Axis has also been an underdog only.
You think like that?
Unlike, last year who's performed? ICICI Bank
Yeah.
and State Bank of India.
Yeah.
HDFC Bank has been for the last 1 year an underdog, but he's still got the merger issue. We don't know how the merger issue will play out, etc., etc. All that will happen over the next 6 to 12 months. Axis Bank has no issue with him right now. It's like a clean. So
Can I say that is Nilesh Shah's Muhurat pick?
I think so. Don't own it, but if you ask me who can be like really that Kohli, from a setback to a comeback. That's what Kohli is,
And
right?
who within mid caps would do the trick?
Many contenders.
Yeah.
Many contenders. It could be it could still be an IDFC First Bank. It could still be a Federal Bank. It could still be an Angel One.
Outside banks.
I think ICICI Lombard. He's been down and under for whatever now 2-3 years. Again, a good chance for him to kind of have a comeback. So it could be them.
All right, we'll get the pre-open rates in seconds from now, and then first pre-open rates for a new Samvat here. नया साल नई शुरुआत The pre-open rates are indicating that we are in for a grand start. 17,800 is what the pre-open rates are indicating for the Nifty. 123 points up for the Sensex. So, I mean, that will get adjusted. I don't think Nifty and Sensex will be able to maintain that kind of a gap. So, I think Sensex automatically will start adjusting on the higher side. So, 17,800. Nifty is indicating that we are in for a good start and a decent start. Before we just go back to Nilesh, I'll request my producer to fire the 1 year chart of the Nifty, and that is where I guess Nilesh, while we may talk about comeback in Adani, our performance in ITC, Mahindra and Mahindra hitting a new all-time high.
But the index doesn't reflect that.
Index does not reflect that.
Yeah.
That is the grain. I mean, the grain of the truth is that the index in last 1 year has given you no returns.
Yeah, absolutely, because you have a large pocket which is the IT services, which has really not gone anywhere. If at all, it probably is down and down significantly. I'm not sure if Reliance has kind of in a way gone, has appreciated in any way in the last 1 year. The two HDFC Bank, HDFC, again, these are all heavyweights. Reliance, HDFC Bank, HDFC, Infosys, TCS, Wipro, all put together. These are like half a dozen names which are huge heavyweights. And they probably have either been flat or they have been down over the last 1 year, which has offset a lot of gains which, M&M or ICICI Bank or ITC, any of them they have made, they have offset those kind of gains. And that's what is beginning to see in the Nifty itself.
But Nilesh, has IT fallen enough to be bought again?
I probably think that it has fallen enough in the sense that it's been a huge underperformer.
Yes.
Going forward, I don't think it'll be an underperformer. I think it'll be a market performer. Another 1 to 2 quarters of consolidation still required. My sense is IT will bottom out when the US officially declares that we are in a recession. Today, there's still talk about a recession. But the day the United States declares that yes, we are formally in a recession, my sense is that's where IT will bottom out. That's the time to kind of go aggressive on IT at that point of time. So maybe there's still some pain, and that event is probably 2 quarters away. Maybe sometime around the early part of 2023, maybe sometime around March, April is when we'll get a better sense on this.
So Infi, TCS persistent?
I think for now, I don't think one should just kind of in a way just observe them.
No, after 2 quarters.
I think they'll end up becoming good buys. I think particularly, Infosys is really standing out amongst all these names.
It is, yeah.
Valuations are reasonable. Some of the initiatives that they have taken, especially in context of moonlighting and all of that, they have really been kind of made some very strident moves, which is something which is getting acknowledged already. So what it looks like that from the big boys, it seems to be Infosys which probably will lead the pack. But again, I still think we still have another 1 to 2 quarters before we clearly say that this is now the time to buy aggressively. In terms of valuations, it's probably trading at about 26, 27 times trailing earnings. Long-term averages are around 25. Any number around 25, below 25, I think will create a nice opportunity in a large cap frontline stock like Infosys.
Now, before I go to Sunil Singhania, I just want to bring this point out for our viewers because between Friday, Saturday and Sunday, it was all about big banking numbers.
Yeah.
You heard from IDFC Bank, you heard from ICICI Bank, you heard from Kotak Mahindra Bank. Now, what is the golden thread which connects them? Growth. The DNA of growth is back. Second, NPAs are lower. And I'm looking at the basic brokerage upgrades now, and that data point will just come up on your screen. The potential return post numbers, most of the brokerages, this is the consensus number, they expect that the potential return for HDFC Bank from here could be 25%, Kotak could be 10%, ICICI Bank could be 15%, and IndusInd Bank could be 23%. So it's all about banks and the kind of growth what they've reported. Sunil Singhania, happy Diwali, thank you for joining us.
Happy Diwali, Nikunj, and everyone at ET Now, as well as all the viewers. Really great Diwali wishes, and hope that the next year turns out to be as good as the last 3 years have been.
Sunil, we were hoping like Nilesh, you'd make it to the studio and join us for the party here.
Next time, during Diwali, I have a small puja at office, so on Diwali day it's very tough. But let's see.
Nilesh has challenged me that today Sunil Singhania will come and speak stocks on Diwali day. Will Nilesh get it right?
Yeah,
I'm not saying Nilesh, I was telling
This
you.
is Nikunj's
I can talk about I can talk about Chinese stocks and US stocks for sure. Nilesh did not specify Indian
Okay,
stocks.
okay, let's talk about who will be the Virat Kohli of the markets next.
No, I think Virat Kohli has proven that ultimately, you have to be there over periods of time, over 15, 20 years. And despite ups and downs, I think one thing we're very clear is Indian equity markets are like Virat Kohli. They bounce back and they bounce back with a vengeance when people write them off. So I think, we are in a consolidation phase. I think धमाका अभी बहुत पास है.
Sunil, we can look back and talk about the market that look Nifty has given no returns, but we can also get equally excited about the fact that Nifty has not fallen in a year when things were really tearing apart at a global level. On the macro front, on the geopolitical front, on the interest rate adjustment front, and on the inflation front. What is in store for us in this Samvat year?
I think Nikunj have hit the nail. If you see, we had 2 great years. 2 years where portfolios doubled and tripled, and after that we have had a year where we have not gone anywhere, but we have not lost out. And when you compare that with what has happened in the world, I think US markets are down 30%, bonds are down 30-35%. So it's not only the equity market investors who have lost out globally, but even the bond investors, the so-called safe bond investors. And in that context, India, I think, has stood out. And this, despite the fact of what has happened in Russia and basically the biggest war possibly after World War II, what has happened in China, in respect to Taiwan, what has happened in terms of 30-40-year highs in terms of gas prices, and inflation and interest rates. I think given all that, I think hats off to the Indian economy, to the Indian investors. We have all held our ground and very beautifully.
I request you to stay on with us. At the moment, let's take it across then to my colleague Vinny Motiwala. She's joining in for a mood check right where all the action is today, and that's the Bombay Stock Exchange. Vinny, our festivities, the order of the day?
Absolutely, there's no doubt about that, Avan. Look at the buzz behind me, it's hustling, bustling, and just few moments away from the Muhurat Trading Session to start. So there is a lot of brokers, there are a lot of members of the BSE coming in here, all set to make their trade. It's a very auspicious day today, so they will be doing that. Lakshmi Pujan did get over as of now as well. A lot of members were there, a lot of crowd was there, and surely seems like, everyone is back with a bang this Diwali. Finally everyone can now freely step out because, maybe some bit of COVID is behind us as well. So surely that is a very exciting factor, and you can see everyone with their family members right behind me. So very exciting over here at the BSE.
Right, Vinny, thanks a lot for that. Just to give you a little bit of flavor for our viewers here, Vinny is joining us from Bombay Stock Exchange. And the place where Vinny is standing, that is the famous Rotunda Hall, where actually at some point in time, paper trading used to happen, which means that brokers, they would come with their family members, they would punch in a trade. That is a floor which in a scene, or that is a building which has seen many booms and many busts. That was a trading at some point in time where you would actually see, there you go, some brokers, I think there are some family members who've come there. When I started my career, it had already become demat. So I never enjoyed, or I never had a chance to witness this entire halla gulla, shor sharaba, what you say, on the Bombay Stock Exchange.
We've seen it in many movies and many series.
It actually began, I think, Muhurat trading at the Bombay Stock Exchange in about 1957 or so, and then much later for the National Stock Exchange. But yeah, you can see the buzz on your screens as Vinny is joining in live from that location. Meantime, Sunil, wanted to get in your take on the defense theme, because without a doubt, it's really been the flavor of this season. How are you looking at really the space as a whole?
So I think, we all know that defense imports constitute one of the largest import bills for India. And given what has happened in the world and given the kind of shifting which geopolitical equations are having, I think it is very imperative that every country now starts to be self-reliant, particularly in products like defense. And I think our Prime Minister as well as the government has been very vocal about it over the last 1 year. The only problem is I think trends in the markets are getting discounted very quickly. So what used to take 2-3 years are now happening in 2-3 months. And I think from a sector which was completely neglected, we are now in a zone where any company which even declares a decent defense, the stock zooms up. From our perspective, we like the space, but we have been underweight on the space largely because of few reasons. One is most of the companies are public sector companies, and particularly where the focus on return on equity is not there, we tend to stay away from these public sector companies. Second is these are long gestation sectors. It's not that today, the government announces that they're going to try and buy this from India. It's going to happen tomorrow. It's like a 5-7 year sort of a period. And therefore, one has to be a little bit careful of what you get into. So I think while accepting and admitting and also having a view that the sector presents great long-term opportunity, I think we'll refrain from chasing momentum.
Let's add some color and sparkle, and Diwali is also about food and festivities. And Nilesh, I remember last time when we had you on Muhurat Day, you were talking about liquor stocks, you were talking about Chakna stocks. I still remember all of that.
And then also
Varun
pharma company on top
Beverages,
of it.
United Spirits, and then pharma. So list stands.
Yeah, absolutely. I mean, that really seems to be a kind of a structural opportunity. The whole liquor, alcoholic beverages, they currently, of course, are reeling under some margin pressure as raw material prices have gone through the roof. But they have the ability to pass these price hikes as soon as they get the approvals from the government. But post that, I think it will be back to them getting into those mid-teens, high-teens margins. And the demand continues to be as strong as ever. I think drinking is becoming more and more socially acceptable. There's more partying which is happening. There's work as well as fun.
With ITC cigarette revenues as well.
Absolutely.
But yeah.
So clearly, I mean, that is a structural opportunity. For the next 5-10 years, you're going to see hundreds and millions of new people coming in and being eligible to kind of drink, which will drive demand. So I clearly believe that the leader, which is United Spirits, and the challenger, which is Radico Khaitan, I think both are great. I mean, we own both of them, and I think both are poised for some really strong growth in the long term. In terms of the food pack space, again, interesting set of ideas there. The likes of Pratap Snacks, DFM Foods, Mrs. Bector, these are some of the positions that we own. These are all kind of relatively small companies today, but they have tremendous potential. Valuations are attractive, and again, they too are reeling under margin pressures purely because of raw material spikes in raw material prices. But I think that will start to abate, and maybe a quarter, 2 quarters down the line, you would see the margins getting to expand, which will see their earnings kind of grow and grow in double digits. So I think both these food products as well as alcoholic beverages are great opportunities from a consumption point of view.
Sunil, everyone in last 3 months has spent disproportionate amount of time trying to understand the mind of US Fed, what European central bankers would do, and how crude and inflation in the developed markets would move. Do you think we should stop doing that? And we should only focus on stock ideas from Nilesh and sector calls and theme ideas from Sunil Singhania? That is the easy way of making money. Chhod do Fed ko is saal.
I hope it was as simple, but while completely agreeing that over the last 20-25 years, I think those who have followed the second advice from you have been those who have created wealth. But having said that, I think this world is connected. And obviously what is going to happen in one part of the world is definitely going to impact India. Maybe, the extent of
just stay with
impact
me.
might...
First rates, Naya Saal, Nai Shuruaat, new Samvat rates, and it's a green. It's a solid 150 points higher for the Nifty. We are knocking closely towards 18,000 now. The small cap index, a vibrant print. The mid cap index, a vibrant print. So Samvat 2079 has started on a high note, and that is what you want to see. You want to see this festivity really extending itself. There is a lot of global push which is helping the market mood. Today is just 1 hour of trading, but that is also coinciding with what is happening in the world, and also the fact that markets will be reacting to numbers. Reliance numbers were not great, stock is moving higher. HUL numbers were not fantastic. The stock today is not reacting to those numbers. It's a 3% off, not like a scary cut. But if you look at banks, IDFC Bank, let's look at it. ICICI Bank, Kotak Mahindra Bank, that is where large part of the market action has really shifted. ICICI Bank, 1.5% higher. HDFC Bank, rolling along very smartly. Kotak also a smart print. But for me, the surprise, Aisha, is Reliance. Numbers were not great. They were not extraordinary. But the fact that markets are not reacting to post set of numbers, that just tells you the market mood we are in today.
Yeah, absolutely. Let's also check in on the stars of the Samvat gone by. Shall we call them that? Let's see what M&M is doing. ICICI Bank, of course, is holding out very, very smartly. Let's check in on M&M. Let's check in on what the Adani group of stocks are doing. I mean, how can we not mark those stocks, right? Adani Enterprises, the newest entrant into the index, starts off in the green, 2% higher for Adani Power. Adani Transmission going strong, 1.25%. Adani Gas, all the Adani group stocks in the green as we speak right now. The flavor, of course, has also been banks. Axis Bank, after that mega move of 8.5% that it saw on Friday, I definitely want to recheck what Axis is doing. 911 is where that stock is. Canara Bank, RBL. It's interesting to see that the smaller boys are the ones which are actually catching up. So it's not just ICICI Bank and SBI. It's more a bottom-up story which is now going on within the banking space. And then, of course, the entire PSU cluster. Who can forget that even though the Nifty for the year gone by has been flat, it's actually PSUs as an index which has managed to outperform, led of course by most of the defense names. HAL now starting at 2400 plus, BEL going extremely strong. The entire clutch of these names, anything to do with defense has held out. In fact, anything to do with PSUs has held out. I'm going to remove the oil and gas PSUs, of course, out of that list. Now let's look at what IT is doing because, you know, for the index to move higher, it's Reliance and IT which also need to participate. Banks can't do it alone. Infosys holding up 1.5%. TCS going strong. Tata LXC, which has really gotten bruised after its quarterly performance. Let's see what that stock is up to. Well, finally some green, 7,300, 0.7% higher for Tata LXC as we speak. So great going, 1% higher for the index, 17,700. Kunal, your target of 17,800 is almost here anyway.
Chalo, high karo. Bank Nifty?
Up now, what, 18,000? 18,200.
So yeah, I think we'll get greedy more this Diwali. So I think now the stage is set for the markets to break past about 18,000, and then if the global market rally sustains, then we could be looking at much higher targets for the index. You know, this move which we've seen the last 800,000 points on the Nifty is more profound because of the move in the bank Nifty. I think that's, and more large cap names participating. For example, Nikunj highlighted like Reliance numbers were not good, but then the stock moved up higher. L&T today is amongst the top 2-3 gainers, 2%, 2.5% higher. So there are a lot of large cap names which are adding. This makes the move not just more formidable, but possibly it could probably also sustain and grow much stronger from here.
Sunil, just like IT was the consensus buy exactly a year ago, bank seems to be occupying that space. And seldom we've seen that consensus calls, they make a lot of money. The fact that banks are outperforming, everybody knows that. The fact that banks would be big beneficiary of the economic activity, everybody knows that. The fact that banks have low NPAs and high NIMs, I think that is something which markets are pricing that in. So my point is that do you think banks from here in next 12 to 18 months can give double-digit returns?
So Nikunj, you're absolutely right. I think financials is turning out to be a consensus sort of a view. Having said that, I think the good thing about the banks is that almost 50-60% of the exposure in the financials in companies which have not moved at all. So I would say while the sector view is quite consensus, I think stock selection this time has gone completely wrong. This whole thing about sticking to the couple of 2-3 quality names on the financials have not worked, because it's been the broader based financials which have done well. So the corporate banks and the public sector banks, which were sort of written off, I think they have bounced back much more in terms of cleaning their balance sheets, in terms of credit growth, and therefore the profit growth for them has been phenomenal compared to some of the consensus bets which were there over the last 5-10 years. So I would say that one has to be cognizant of the fact that a rise in deposit rates is a matter of time. It is going to be impactful in terms of the cost of borrowing for banks. At the same time, I think there is still a lot of room left because you have just come out of the cycle, and at least for the next 2-3 years, we don't see any major accretion to the NPL the gross NPA numbers. And with credit growth picking up, with the economy doing well, and both corporate, government, as well as on the retail side, credit growth picking up, I think we still have strong legs. But you have to start looking beyond the consensus names within the sector.
MCX, that's your big star performer this evening. 3.25% higher for MCX as we speak right now. Kunal highlighted L&T. That's your top index gainer with a 2.25% gain. The biggest underperformers, or one of the biggest underperformers of the year gone by, HDFC is holding up 2%. There's of course Bajaj Finserv, which is not going anywhere, 2% higher there as well. Nestle, HDFC Bank, and then there's ONGC, surprise, surprise, 2% higher there. The market does today have its fair share of losers as well. So Unilever, for instance, is down 2.6% of the futures. RBL Bank is down 2%. Loris Labs, Torrent Pharma, and Piramal Enterprises as well is mildly soft. On that note, let's get in some firecracker ideas. Naresh, what's on your list?
So looking at stocks more from the looking at more in the financial space. So first is a buy on LIC Housing Finance. The stock is setting up for a breakout above 420 level. So stop loss at 405 and a short-term target price of 460. Second, continue to like IDFC Limited, which has given a good big breakout above that 72-75 mark. This should go towards 90 in the short term, a stop loss at 75.
Housing Finance and IDFC, those are Naresh's top recommendations, sizzling firecracker ideas, however you want to put it. Incidentally, HUL is your only stock on the Nifty 50, which is in the red, otherwise gains being powered by L&T, HDFC, Bajaj Finserv, as well as SBI. Lots of earnings reactions which are playing out at the bottom of your screen, but Kunal, let's get in those top trading calls from you as well.
So I'll focus more on banking names and private sector banks, two stocks which I am extremely bullish on from here on. IDFC First Bank would be the first pick. I think it's a brilliant chart which is shaping up for IDFC First Bank. What started off from being more of a short-term breakout has now emerged into a huge breakout in the monthly charts. So would be bullish on the stock for a potential target of 100 from here on. Stop loss for this trade could be kept at 40. And the second big call would be on City Union Bank. We've not discussed the stock that often, but the way the stock has performed in the last 6 months, it was one of the first mid-cap banking names, private sector side, which had started to show signs of strength and is now perched almost at the 200 levels for itself. So that would be another call. Targets of 240 on City Union Bank. Stop loss for this 160.
All right. On that note, Nilesh as well as Sunil request you to stay on with us. We'll slip into a very quick break with news that the screen is sparkling at 17,761. Stay with us for more portfolio ideas as well as stock picks.
template for next couple of years?
Nikunj, what I feel is what I alluded to earlier, that you had a 30-year cycle where the world went unidirectional, that there is great USA and they will rule the world. And post 2008, the Fed has your back. And in a way, they tested out MMT because everyone printed. And already, even when US is saying that we are going to hike rates, in Europe, they've abandoned it. UK, of course, abandoned it. Japan has abandoned it. So the power of the central banks has been taken away by the politicians. And even in the US, it's my belief that Mr. Powell is not going to be Paul Volcker because the current president is not Ronald Reagan. So when they get to a threshold of pain beyond which people can't bear, math will change. And when you all are geared up 325% of GDP is your debt ratio, 300 basis point increase in interest rates is a 10 percentage point increase in interest cost to the economy, of which 3% if it goes to US fiscal deficit, 3% goes on corporate balance sheets which are leveraging and doing buyback of stocks, 3% goes into individual balance sheets which you have to pay more rent or more credit card bills. It's demolishing. Obviously, it comes with a lag. So we haven't yet seen the effects because it's only been 6 months when the rates have started going up.
Thanks so much for staying on with us. We are live from the ET Now studios on this auspicious Muhurat Trading Session. And of course, the screen is sparkling. 17,739 is where we're at. The broader markets too are participating and it's banks all the way. We're in conversation with Sunil Singhania as well as Nilesh Shah of Envision, as well as our chartist Kunal Botra and Nuresh Mirani. Well, Sunil, wanted to get in your take as to how exactly you're playing the entire capex theme. Yes, we discussed defense and that's a sector that everyone seems to be bullish on. But given the fact that everyone's alluding to the fact that we're in a manufacturing renaissance in India, what's the other, sectors or top themes to bet on the capex theme?
No, you're right. We are definitely witnessing, added momentum on the domestic side as far as capex is concerned. Across sectors, companies have been doing well over the last 2 years. Balance sheets are pretty light. And there is, of course, domestic demand to match it. And that is helping the capex-oriented companies and capex good companies. We have already seen how they have done well. On the added advantage side, I think the raw material or the input cost pressure, which most of these companies were facing, particularly from the metal side, I think that has now become a tailwind. And therefore, the margin trajectory also looks good. And last but not the least, there is definitely a huge opportunity coming in from the export side also. You can call it China plus one strategy or input cost going up, particularly on the euro side, which is helping Indian companies. And I think this is going to be, I would not say it's a short-term kind of a theme, but this is going to be a trend which would aid Indian companies from a 3-4 years perspective. So we remain quite optimistic on it. I think we are watching particularly the domestic sectors on the infrastructure side, maybe cement side, to see some uptick as far as margins are concerned. And if you see a tailwind there, I think that sector also, those sectors have also not performed, and there's been massive consolidation. So I think those sectors also can be quite interesting from a medium-term perspective.
All right.
Sunil, it's Diwali day. We're not going to let you go just like that. You have to give us one Samvat idea, a stock pick.
So, we all want multi-baggers and everything else, but we don't realize that India itself has been a multi-bagger. From where we were and from where we have reached, I think anyone who has been positive on India has ended up creating a lot of wealth. So without dwelling into anything, I think all I can say is that India is one economy, which even in the toughest times is slated to grow at 6 to 7%. I think there is hardly any economy in the world which is slated to do that. In the last 75 years, we have reached a $3 trillion as far as economy is concerned. At least in my doubt, I have no, qualms in saying that we would be 6 trillion in the next 7 years, 8 years maybe. And therefore, the wealth which we have created over the last 75 years, exactly that will create only in the next 7-8 years. So I think India itself is a great investment story. Be positive, have some patience, and things will work out very well in terms of wealth.
All right, Nilesh, meantime, let's also get in your outlook as to what the sense is when it comes to the entire PSU space. Is there any interest here? Because we're just looking at the Samvat returns, and that's been the top gainer, followed by metals and banks. So what about your outlook on PSUs?
Well, the best in the PSUs clearly is the defense PSUs. That's something which, honestly, I think lots is happening there. The opportunity is huge, it's humongous. This whole drive towards indigenization, the geopolitical environment globally, I think all of this bodes really well for the defense PSUs. We like defense overall as a pack, but within that, the defense PSUs are really very firmly placed. Bharat Dynamics, Garden Reach, I mean, these are essentially the ones which, in a way, have an embedded moat in them. That you're not going to see another missile manufacturer, at least in the next 3 to 5 years. You're not going to see another naval warship manufacturer, at least in the next 3 to 5 years. So to that extent, we think that there's a sense of entitlement, which is going to basically lead to massive opportunity for an investor. So I think that's what we like. The big event to really watch out for in the PSU pack is the IDBI bank privatization. I mean, you know, privatization, etc. I mean, of course, the last we saw was Air India. But if IDBI bank goes through, which it is scheduled for March, at least as of now, if that goes through, I think that will be quite significant for the entire PSU space, especially for the PSU banking space.
Okay, Nilesh, great to have you in the studios. Thank you so much for coming in, and wish you a very healthy and prosperous Diwali going forward.
Thank you so much, and Diwali wishes to all of you and all the viewers.
Thank you. Sunil, wish you the same. Glad that you could take time out from your busy schedule and join in today.
Thanks a lot. Happy Diwali.
Thank you. Same to you. Okay, you know, we were just talking about defense PSU. So before we get you some more stock ideas, Kunal, you've been extremely bullish on HAL, BEL, and you believe that they can still be bought, right?
Well, absolutely, yes. So, you know, I think there are, so, you know, as, as the discussion earlier was that we have to bank on the Virat Kohlis of the portfolio. So we look out for the formidable stocks, the ones which have performed all season, all weathers, and you know, BEL, HAL, these are the stocks which are extremely formidable. The best part which I like about the stock is that these stocks were the leaders in the rally when the rally started off 6-8 months back for the defense pack, and they were the ones which started off the corrections first as compared to the corrections which have come back into the mid-cap names quite later. So I would believe that when the next move starts off for the defensive names, these two candidates would be the first one to not just hit back their previous swing highs, but even go much beyond that as well.
Okay, got you some stock ideas, but it doesn't stop here. Also hear out some of the top ideas that we've managed to gather with all of our experts who've joined us this Diwali.
They've been gaining orders, they've been maintaining their market share in the entire ethanol business at 65-70%. And plus with this Russia-Ukraine conflict, there is a recognition globally also that there needs to be some sort of fuel security. So from Europe also, a lot of fuel mandates are likely to come both on first and second generation ethanol. Last 2 years they booked orders, but the profits didn't come because steel prices went up sharply, and they are typically a fixed price model contractor. So now with the input prices falling, we'll see a huge expansion in margins. So I think this year profits will grow 60-70%, next year profits will go 50-60%. I think next year EPS should be 25 to 28, and to that extent the stock offers reasonable return potential.
Just in the right space, probably at the right point of time of evolution of India. The best thing is, in any country in the world, the leading consumer apparel retailer is amongst the top 50 companies in that particular country. You take example of Zara or LVMH and all the other apparel retailers. Now in India, we have this unique situation where AB Apparel is the largest branded apparel retailer player, and yet it's a mid-cap, and this cannot happen. So if India is to grow, then I'm sure consumers will spend more and more on apparels. And there is a big shift that is happening from unbranded to branded, because people want to wear branded apparels. And if that be the context, then I think this is a company which can continue to grow at a high rate on a sustainable basis over the next 10 years. So I think it's one of those classic stocks which you just buy it and just forget about it.
So what would be the return then you would be expecting from this one? Last year it was, since last year somewhat to somewhat I'm comparing, it's like 15% as of now return. How much are you expecting it? How high could it fly now?
well, why should we cap upside by putting a number to it? Yeah. So great companies, they tend to just compound over a period of time, and we've seen that over a period of time, the kind of returns they accumulate for investors are unparalleled.
So they already have a capex plan going where they're spending about 350 crores in capacity expansion for their businesses. And they're also going into polyester tire cord fabric, which is used for radial tires. So I think the growth which has been coming from capacity utilization will further go up with additional capacity coming in. And the margin will also improve because when they have different kind of products, value-added products coming into the market, they can use their capacities for different products where the margins are better. So another thing they're doing is that even the nylon 6 waste that they have, they even using waste to improve that, recycling that and getting that back as part as raw material and even selling them into the global market. The valuations also, the company is very attractively priced and the market cap is almost half the sales, last year's sales. So I think that's such decent valuation and there's a possibility of re-rating because the capacity is coming in. I think it's a good investment from that angle.
All right, getting a move on then, the market gurus Manish Chokhani as well as Hiren Ved, they played the Wheel of Fortune and they weighed in on sectors that you should watch out for this Samvat as well as what their expectations are from the markets and asset classes that are likely to outperform. Take a look.
Wheel of Fortune this time around, we have Manish Chokhani, I have with me Hiren Ved, and we're going to spin the wheel. Which asset class is going to outperform in the next 1 year?
We are an equity guy, so it's like going to a barber and asking for a haircut. So
I know. One sector to watch out for.
So this year clearly it'll be financials, but at some point I think IT will get very interesting again.
Nifty level next Diwali.
Closer to 24,000.
Really? Yeah. Wow. Diwali pledge.
Diwali pledge? I don't take any in Diwali. Just go Diwali to Diwali, enjoy yourself. That's it.
Well, it's a strong Diwali day, 1% higher, although we've eased off just a tad bit from the session highs. 17,743 is where we're currently at for the Nifty futures. And you got to definitely mark what Asia has been up to or what it closed the day with, considering we were the only global markets which were shut. It was a bit of a mixed bag actually for Asia. Deep gashes coming in for China, deeper for Hong Kong markets. The periphery markets though managed to hold out quite okay. Europe as we speak is holding out very, very smartly. News coming in from UK stating that Rishi Sunak is all set to become the UK PM, and because of the rival, that's Penny Mordaunt dropping out from the race. So FTSE holding up 0.5% higher, DAX up 2% right now, CAC up 2%. And guess what? The US futures as well are indicating a nice smart start for us, 0.7%, which is a good 230 points up for the Dow futures. 0.6% up for S&P futures and Nasdaq futures as well, marginally in the green as we speak.
Rishi Sunak has become the next
Has not
PM,
become, is set to become.
Is set to become, but on a Diwali day.
On a Diwali.
On a Diwali day. 75
Catch the
years.
India connection.
75 years of independence. Rishi Sunak almost set to become the
of
next
an Indian origin,
of an Indian origin
yeah,
on the Diwali day,
PM
on a
of
year
a country which at one point ruled India.
Exactly, on a year when we're celebrating Amrit Mahotsav. So if this is not the decade for India, then what will be India's decade? Just think about it, how things are just falling so beautifully, in terms of what it means for India and how things, in a sense, are moving for India. Someone very nicely said that we can endlessly argue about your view on Indian markets, but there is one thing which is in a permanent bull market, that is that world is betting on Indians.
Yeah.
Just think about it. Just think about it. Okay. Kunal, we've got IDFC Bank, but some would say that is like old wine in a new bottle. ये 2 week पुराना idea है. नया साल नई शुरुआत. Let's get a new idea.
नया button दबाओ. We buy new. So I mean the other stock which I was bullish on is CUB, City Union Bank. I think that stock is also no banks.
Anything apart from banks.
Well, it's a tough one. Then I'll go for Aegis Logistics as the other pick. I think it's again a classic chart, just very close to its, I think, 6-month high, not a 52-week high as well as a life high, but I think that's also the other stock. 300 approximately is where it's trading, and I would probably look out for another 20 to 25% upside, at least from a short term.
What's the largest position? Personally.
As of now, banks.
Viresh, what's your largest position?
So it's banks and a lot of small caps.
Isn't there too much of consensus in banks? Fundamental guys like it, fund managers like it, technical guys they like it.
So that is how consensus has started playing. So if you remember going back a couple of years back, it was ICICI Bank which remained a consensus bet for a year and a half, and it continued. So I think we are just shifting in different banks. So earlier it was ICICI, SBI. Now I think it is Axis as the new ICICI.
Is it Kunal or is it still IndusInd Bank?
It's very much IndusInd Bank
Yeah.
as of now, but I have also added many of these other smaller chotu banks as well.
Will HDFC Bank in next 1 year give positive return? Because I get a sense that HDFC Bank has become the new ITC. The way we were talking about
Of
ITC
6 months back.
of 6 months back,
Yeah,
a year
not,
back.
Not
Yeah.
ITC currently.
Exactly.
Yeah.
So that is something we'll be watching out for. So if you look at what happened with ITC, the whole FII shareholding went down from 20 to 10%. And the quarter where it changed from December 21, it went from 10 to 12%, the stock has actually gone up. So HDFC Bank similarly, once the event is over, that is the time. And this is the most consensus bet of not working out. So everyone is of the opinion that whatever happens, HDFC Bank is not the best bank right now in terms of price performance. So I'll be watching out for some triggers to play out. So HDFC Bank could be the biggest contra trade going forward, not as of now.
Okay, that's the view coming in on those very hotly contested and very stocks that are very closely watched out for. But let's get a move on then and focus in on some more big market voices that we've been interacting with. The power sector is the only space where there's value right now. That's the word coming in from market veteran Prashant Jain. This is his first interview since his exit from HDFC AMC. He shares his market mantra as well as top themes to watch out for.
I think where there is still some value, I think, is the same banks and power sector. Power, I think, got penalized a lot more than what it should have been because of the emergence of ESG-based investing, because of certain challenges. But I think as the world is realizing, energy is something very basic, and despite having invested trillions of dollars in non-conventional energy, if you look at the world's mix of energy, the needle has not moved at all. So I think this shift, it will take longer and it is going to be very expensive. And there is a place for, therefore I feel there is a place for even conventional energy. It has a very long runway.
Has IT become cheap? Because yes, there is a challenge in terms of the big picture, but again, valuations, stocks have corrected 25 to 30%, and now unlike the previous cycle, IT companies are regularly doing a buyback, which changes the future forecasting very, very brilliantly.
No, I think IT is a blessing for India, to be honest. But for IT, India would have been in a very, very worse position, because the IT industry gives us the jobs, gives us the dollars to even buy energy, right? So I think and India is extremely competitive. There are hardly any places in the world which can match up to India. And if I may digress slightly, if you look at the demographics across the world of working age population, it is declining in Japan for decades. It has been declining in Europe for more than 10 years. It is declining in China also, the working age population. And even US, the growth is hitting nearly zero. So I think it is not just IT, but and in COVID time, the work from home has become very acceptable.
All right, on that note, it's time to slip into another very quick break as we're enjoying the Muhurat Trading Session. And we've got Dharmesh Mehta as well, sharing his views on the markets when we return.
Naya Saal, Nai Shuruaat, Happy New Year. And for those who've just tuned in, here's wishing you and your family a wonderful year ahead. It is a Naya Saal and Nai Shuruaat indeed, because Nuresh, you've come to the studio. Naya Saal, Nai Shuruaat for you.
Absolutely. Maybe a lot more going forward in the next 1 year.
Hope so. You said it.
And Dharmesh Mehta is planning to start coming to studio very soon. That will be Naya Saal, Nai Shuruaat, right, Dharmesh bhai?
So whenever you tell me, I'll be there.
Look forward to that. So what's the, I'm starting with a very basic question to everybody, which is your best idea or your Muhurat idea or your Muhurat trading idea. So you can choose anyone. Your best Muhurat idea, your best Muhurat idea, your best Muhurat investment idea, and you cannot say that it is India, and in the medium to long term you remain bullish. That is the caveat. Is my voice not reaching you?
Is that for me?
That's right. No, I'm going to start with what I've been asking everybody, your best Muhurat idea. And the answer which you're not allowed to give us is it is India and you remain medium to long term bullish. It has to be more than that on this Muhurat day.
Well, as you know, Nikunj, I never give stock ideas, but this time I'll be brave enough to give you one as you put me under the dock. I think so it will be HDFC Bank and nothing else.
Why HDFC Bank and why nothing else?
I think so the financials are looking very, very strong. I meet so many corporates. The capex is coming back. I believe this mega merger event will be over in the next 3 to 6 months max, and things will settle down. All the fears of they're getting delisted, somebody has to sell, all the noise around it will settle down, and people will go back to basics. And I think so the valuation is still very attractive in the India's #1 bank, especially after the merger. So I would definitely be long HDFC Bank.
The consensus view, Dharmesh bhai, this Diwali is financials. Last Diwali it was IT and digital. So IT and digital, those themes have not made money. What are the chances that what is looking good today may end up becoming a consensus idea, and consensus seldom makes money?
Well, everybody's consensus was that India is a bullish thing, right? So everybody was bullish on India last year or last 2 years, and that idea has played out very well. So I wouldn't go by, just because it's consensus, it doesn't work. Eventually fundamentals work, and I believe financial fundamentals are looking very strong. So I will be in that consensus back and say financials will work this year.
Kunal, it's an interesting rotation that one keeps seeing within autos, right? I mean, last year, which belonged to Tata Motors, this year it was M&M all the way, and TVS Motors as well, of course, in that pack. Do we now see others also performing? And I ask this purely taking a leaf out of what's happening in banks. What started off with ICICI Bank and SBI, now you're seeing that bottom-up story play out. Will that happen in autos?
That's exactly how sector rotation, within sector stock rotation plays out. It's, there are two leaders or 2 or 3 leaders which gets identified depending on the basket of stocks which are available for each sector. Like for banking, it was ICICI Bank and SBI. If you remember in 2020, 21 specifically, because that was a year when all of the other large cap names underperformed grossly, and I'm talking of the likes of Kotak Bank, HDFC Bank, IndusInd Bank, etc., which had underperformed significantly in that time span. These two stocks managed to lead from the front, and then you have seen the emergence of mid caps and then the PSU banking names which are looking quite charged up. Coming to your question on the auto pack, I think we could probably see a very similar kind of a spate for the auto names. M&M, TVS Motors look one of the strongest from the large cap or the formidable ones from the auto pack. But then there are other candidates which are also trying to emerge quite well. Maruti, for example, I think the stock is consistently trying to come back towards the 8,500, 600 plus mark time and again. I believe eventually there would be a breakout for Maruti and possibly a breakout of the all-time high levels. Just shy of, I think, the 5-digit mark, 10,000 plus for Maruti. That could be possible, this Samvat as well. The other names from the auto pack, I would still believe the likes of Ashok Leyland would still look very strong to me. Eicher Motors, I think we've not given that kind of an impetus to the stock from 3,000, 3,300. I think the stock has also not looked back. great, last 6 months. I think 3-4 months out of the last 6 months have been fabulous for Eicher Motors as well. So the move is getting more diverse into the auto pack as well. M&M has stopped falling as well as the stock has started to become more range bound. So all of this augurs very well. We go back just one step to the auto anch names, tire stocks, the other ancillary names, have also done pretty well for themselves. So it's the entire sector which is looking quite strong. Whether you bet on the large caps or the ones which have performed, or you bet on the possible outperformers, I think the bet over here is how much risk you're willing to take.
It's been such an interesting year. One side you saw underperformance by Tata Motors but outperformance by TVS Motors. They both represent EV. TVS got re-rated because it's moving into EV. Tata Motors also moved into EV. You did not make too much of money there.
Though this was the stock of 2020, right? Tata Motors? Yeah.
The stock of 2021.
One of your Diwali picks earlier, remember?
Yeah, to Diwali.
Yeah.
I mean, 2020, I think we had done this on Insta Live as well.
So, Dharmesh, my question is, and I'm again going to take the clock back before we take it forward. Exactly a year ago, last Diwali, fintech and consumer tech, those were the fashionable buzzwords, whether it was listing of Nykaa or listing of Policy Bazaar. EV was occupying center stage in terms of the go-to sector. ESG dominated theme was a powerful theme. But look at the reality. While the need for EV will go higher, not every EV business has made money. Fintech and consumer tech, they've completely become the backbencher, and good old energy and tobacco stroke sin stocks have made a comeback. So what will be the dominant theme for this Samvat year?
See, Nikunj, also last year, you don't have to forget that we had a war coming in between, which nobody envisaged. So a lot of things changed. So last year was not a normal year, and a lot of the themes changed thanks to the Ukraine war and what kind of situation people were in. So I wouldn't compare last year to this year. But this year, I think so the capex cycle is really strong, and demand for projects is going up substantially. And India in the overall pack of things have done phenomenally well. So I think so when you meet the corporates, you see the kind of conviction and the kind of confidence of putting up more projects. That's the reason, more fundamental, where the banks will do better rather than more like a consensus call. What's going to happen next year? We're going to have a very eventful 2023. Trust me, it's not going to be an easy 2023. So the kind of markets we saw in the last 2 years, 2023 actually can be a difficult year for global markets, also for India. So I would say there are a lot of events happening. I would not like to crystal gaze and come and tell you what's going to happen this year. I would rather play it by the year.
Dharmesh, I know what a cricket fan you are, although you've already spoken about HDFC Bank, but just taking a leaf from what India did to Pakistan, we want to know who's going to be the next Virat Kohli of equity markets. And don't worry, it's not just you. We've asked all of our guests this.
My voice is already gone shouting and screaming for the yesterday's match. And I wish I knew who's Virat Kohli, and also let's not forget Hardik Pandya. He's the one who actually started the game for us. So this was the classic match where you had seen Gautam Gambhir actually lead the fight back in the World Cup when Mr. Dhoni actually hit the last shot, and it was Dhoni's World Cup, but actually it was Gautam Gambhir. So I would say it's not only HDFC Bank, you will see other sectors also performing. I'm very, very bullish on the manufacturing sector. I think so the kind of opportunity with China plus one or Taiwan plus one, as we call it now, which India has got, and the way the government policies have been announced to favor the manufacturing sector, I think so with financial manufacturing sector will be the Hardik Pandya of next year. And I'm very sure together with financials, I think so India will do very well with these two sectors performing at the top for sure.
Narrow it down, Dharmesh. Manufacturing is a very large pool. Who exactly do you think is going to be Pandya?
I think so. The electronic manufacturing, as we already heard, few companies we have started. We just got one company to IPO. There are a few more coming on the way. We talked about Foxconn announcing with Vedanta a large tie-up. I think so. Electronics and consumer goods related contract manufacturing will do very well. We're talking to a few companies. Now there is dual sourcing kind of model which is coming up where the large customers of the contract manufacturers are telling those companies to actually put up a plant or a warehouse next to their plants in the international market so they can get anytime delivery they want. It generally gets disturbed during the supply chain logistics goes for a toss when this events happen. So I think so India is now the most favorable destination. People want to move away from China, Taiwan, and I don't think there is any other option except India, especially with the policies being announced, especially on the PLI policy and all. I think so India is going to be huge beneficiary and that will bring huge FDI money, if not FI money.
The recent IPO which I think Dharmesh took public was Sharma SGX. That's done phenomenally well, at least when it got listed. I mean, right now market conditions may just push it here and there, but that's the big pot which Dharmesh is referring to. Electronic manufacturing. I was reading a report. I shared that after oil, the second biggest component of imports for us is actually electronics.
Yeah.
And within that, I think for the first time now, Government of India, after the PLI schemes and everything put together, we have now started exporting mobile phones. Of course, we are not making our Apple phone and Samsung phone, but there's some categories.
But they are getting assembled here.
They are getting assembled here. So there is a big change in the way how electronic manufacturing in India is going to change, and that's typical. When a manufacturing comes into India, if you're a design company, if you're in the manufacturing company, if you're in the assembly line, an ecosystem essentially gets created, and that really could be the theme. So if defense was a powerful theme, or defense is still a powerful theme, electronic manufacturing could actually make a comeback as one of the small themes which could become large in this Samvat year.
And Dharmesh, another sector as well that you've been bullish on has been the auto space. What about identifying autos and auto ancillary as a bullish theme for the year ahead? Would that hold?
Yeah, so in fact, you're going to see a lot of contract manufacturing also happening in the auto space. So you'll see a lot of auto ancillaries becoming China plus one kind of opportunity. They'll be coming to them. We are taking few of them IPO again in the coming year. I think so that model also is going to become very large. But basically, whatever is manufactured in China, I think so India is going to get market share of that. I believe 40% of infrastructure equipments is manufactured in China. That market is going to come to India also. So I think so this whole China plus one story is not played out at all. We are just at the tip of the iceberg. If things do well, I think so that is going to be a huge exporter for the Indian side.
Ramesh, same time last year you had a Delta Corp on your radar. It was a positional idea. Your Indian hotels on your radar, your Aditya Birla fashion retail, ABFRL on your radar. What fits in that category? Today it may look slightly fatigued, but it can come back as the year rolls forward.
So hotels as a space is coming back after 15, 17 years. So the last top for hotel stocks were in 2006 to 2008. And say when something comes after 15 years, it really lasts at least 1/3 that time frame or even 20% of that time frame. That is what we look at technically. So if you look at Hindustan Unilever came back in 2012 and it did really well over the next 3 to 5 years. So same is the case with hotels. We've seen Indian hotels make the first leg of the move. We could go sideways for some time, but hotels as a space continues to look interesting. Same is the case with fashion retail. Delta Corp on the other end has actually got hit for various other reasons. So it's the only stock in the opening up theme which has not worked out. You could pick up a small cap hotel space, say stock from say Royal Orchid to Indian hotels, everything has moved up. But it is Delta Corp which continues to remain in that GST, non-GST issues. But that looks pretty interesting because the stock used to be at these prices pre-COVID. So Delta Corp could be a contrarian bet from here on. Whenever there is clarity, it should do well.
Yeah,
Delta
even something
Corp
like a chalet is done quite well.
No, I was just looking at Delta Corp. It's actually been the underperformer of this entire basket. In last 52 weeks, it's still down about almost 12%, although it's had few sporadic bouts of some solid green. But yeah, I mean, niche consumption, we've talked about that, Nikunj. I mean, be it hotels, be it, we were talking about liquor stocks, of course, but, that aside, what's happening in the QSR space, what's happening with the fashion retailers, the story is out there for everyone to see.
I think real estate,
and real estate,
I genuinely feel that real estate stocks still have a long way to go. Wherever you are, whether it is urban India or tier 2 or tier 3, real estate is still, housing is still under-penetrated. So depending on the affordability in the city, the need for housing is there, the need to buy a house, the desire to buy the first house or buy a bigger house, I think is only expanding. I think urban consumption fits in very well with what is happening in the real estate space, considering that when you walk on the road, whether it's Delhi or Bombay, Bangalore or Chennai, you can see that construction actually started. Also, real estate as a sector has been in some kind of a bear market for the last couple of years. So there is a structural trend will for real estate to go higher in terms of affordability and interest rates, and B, in terms of where the participation could be because of consolidation and a lot of other factors which actually are at play. Meanwhile, I just want to mark what's happening to US markets because it's important. The Nasdaq Golden Dragon, and it's not the name of a restaurant, guys, it's an ETF. Golden Dragon China Index falls 12%. That means the world now is nervous about the fact that the Chinese premier has seen last 2 years what's happened in China is a big mystery that what Chinese leadership has done and why they've done, whether it is bringing the fintech down, edutech down, putting all those COVID norms. Now looks like we could be in more of that, more of the same regime for an extended period of time, and that is making a lot of investors nervous because investors have really lost a lot of money investing into China. And Dharmesh, since you represent the institutional brokerage part, one's man food is other man's poison and vice versa. Is this the swing moment for India now?
Definitely it is, Nikunj. So I think so. Even if China comes back, which people expect, when you talk to institutional investors, that China in some point of time will come back. But one thing is very clear, people are going to hedge themselves from China, and India is currently the biggest beneficiary of that. There is no two ways about it.
So what is on the list, which is a 3-month or a 6-month list, Kunal, which may not be a trade for the day, which may not be trade for the month, it may be a trade for next 3 to 6 months. You would say, look, it has to be, you have to have a deep stop loss and you have to have minimum 3 to 6 months.
So I'll suggest some high risk trades over here. Paper stocks I've been very bullish on, and I believe that it's a possible 1 to 3 month kind of a time span trade even from here on. So I think you can probably bet on West Coast paper. I think trading at 575, 580 levels, I would probably be looking out for at least 650 as a target for West Coast paper. One of the other high beta names and something which has done exceptionally well in the last 6 months is Anantraj. That's also a high beta stock, but again on the charts, it's almost at a 11-year breakout, something which has happened for the stock in terms of extremely strong volumes in just the last 3 to 6 months. So that's also another potential name which I would be very bullish on.
Naresh, a quick check-in on Reliance Industries. What's the view?
So this is one stock which has been going sideways for a long period of time. If you look at it, 2350, roughly 2360 was the bottom on the day of the windfall tax, as well as in March. On the upper end, 2600, 2650 remains a resistance. So it's pretty sideways. So for now, till the time it's in this trend, it continues to be a stock which is an avoid in terms of technicals because there is no clear trend. So one has to let it pass its time. Once it starts making a move beyond that 2600 mark or below 2350 sustainably, that is the point of time I'll start looking at it. So for now, it looks like a sideways stock for quite some time.
Dharmesh, real estate, hotels, fashion retail, where are Indians spending and where do you think they'll continue to spend?
Well, I think so. The spending this year will come down. I'm not too bullish on the consumer side. Retail still will continue to do well, but overall, I think so. You won't have a great 2 years of the retail what you had in 2020. So I'll be a little bit conservative and be cautious selectively. Obviously, a few companies will do well and they'll continue to do well. But I would say overall the trend is, if you can see outside, when you go for Diwali shopping, when you go out, the consumption, I think so, has started literally slowing down. Especially in rural side, there's a slowdown coming, if not in urban.
All right, let's also hear a slice of our conversation then with Madhu Kela. He believes that India is not going to underperform in the long term, and he believes that the party has just begun for the Indian markets. Let's listen into a slice of that conversation.
India will not underperform, कुछ. अभी तो पूरा
पार्टी चालू हुई है.
अभी पार्टी चालू हुई है. मैं भी लंदन गया था ना, तो मैंने एक रिसर्च किया कि वर्ल्ड के जो 25 शाणे हैं ना, द बिगेस्ट इन्वेस्टर्स इन द वर्ल्ड, वन थिंग कॉमन, नॉट one of them had $1 in India.
Was it
relevant?
Yeah. Okay, of course.
Relevant, right? When I say $1, अगर किसी का 100 billion का portfolio, उसका 25-50 million directly indirectly होगा, that is different. But there is no significant investment of the top 25 people. Forget the top guy. तो अपने पीछे तो अभी कितने लोगों को आना बाकी है बस.
And then domestic flow is also
domestic flow is always there. Is always. I don't think India, मतलब tactically for 3 months, can there be underperformance if oil is really going up? 3-6 months, it is possible. But if you are an investor, you actually don't care about the 3-6 months underperformance. Actually, you are looking for that underperformance so that you can buy the stocks which you want, right? So, but if we take a 3, 5, 10-year view, I don't think there is any bearish case you can make about India.
The consensus view with just about every brokerage is India is great, but valuations are expensive, and that, in a sense, is something which everybody is talking about.
To my mind, it is a big misnomer. Let me speak. This is, and this is the biggest point. This is actually a big myth that India valuations are very expensive, because there is a mere certainty of earning in India. Like you can take a case that ICICI Bank will grow at 15% or 25%.
Yeah. Growth to hai.
But growth to hai pakka, right? Can you make that same case with HSBC Bank in the world? Can you make the same case with CSFB in the world? Can you make the same case with Barclays Bank in the world? You can't.
Is this the best you've seen in your career?
100%.
Such a powerful point, that these are the best balance sheets what you've seen in your
32
career.
years. Wow. Across sectors, across entrepreneurs.
And the spirit?
And the spirit is also very high, because now whatever capex people are doing, they are doing out of their internal accruals, right?
Only time, and we speak in the language of metals. Investing is about buying gold at the price of silver and avoiding wherever gold is available at the price of diamond. So what are the stocks which are worth gold but are available at the price of silver, name or themes? Similarly, which are the businesses which are great businesses but currently gold is trading there at the price of diamond? Dharmesh?
Sorry, Nikush, I will not be able to comment on individual stocks and sectors right now. But as I said, my theme is very simple. It is manufacturing, and whatever is in that zone, I will look at it. If some of them has got at a good valuation, I'll definitely like to pick them up.
Okay, Dharmesh, we'll let you go and not hold you back too long. I'm sure you've got festivities with the family as well to enjoy, but glad that you could take time out, and wish you and your entire team a very happy Diwali from all of us here.
Wish you all, everyone, happy Diwali, especially your viewers and everyone at ET Now. Thank you.
Thank you so much. Okay, let's begin winding up trade. Well, guess what? It's actually Nestle. It was not just MCX, which is now spurt up 4.25%, but Nestle as well has climbed up very nicely. So 3% is the surge that you're currently seeing on Nestle. JSW Steel is holding up 2.5%, and ICICI Bank and SBI are right on top. If you thought last Samvat was great, Samvat, or rather Muhurat Trading as well has been very good for both these names. So ICICI Bank goes home with a solid 2.25% move, and SBI as well holds out by a good 2%. Let's see what Reliance as well is up to, considering that too came out with its numbers late on Friday post-market hours. Reliance started off with a gain of about 1%, but since then has simmered down. 24.80 thereabouts is where it's shutting shop for the day. Of course, it's a long list of earnings that we've been tracking today. So Kotak, Yes Bank, RBL, IDFC First, they all came out with their numbers over the weekend. So all of them are earnings reactions that you're currently seeing on your screens. Let's also mark the losers too. And RBL Bank, that's fallen 6% today. Unilever as well. It was almost like a pair trade with Nestle and Unilever. Unilever has lost 3.5%. SBI Cards is down 1.5%. Laurus Labs lost about 2%. And Indiabulls Housing as well, which lost about 2% in today's trading session. So that's really been all the magic and all the sparkle and the glow this Muhurat trading day. Not bad at all. We've managed a comfortable 1% in the green. And that's the closing bell. Almost 200 points higher. 17,743 is where we're shutting shop.
Well, it's a good start, which is what matters. Normally, you don't see market close in the green on the Muhurat today. Normally, if the market history is anything to go by, markets have not given very strong returns on the Muhurat today. But this time, I guess the positioning of the market, the positioning of the global markets, the curve in terms of the timeline we are sitting on, and after fabulous numbers which have come from banks over the weekend, I think one thing is very clear, that markets Indian markets are all set to be the differentiating market going forward. So before we wrap, here's wishing all our viewers once again a very happy Diwali and a wonderful year ahead.